And of course, the first thing you're going to say is, well, what about India? It's one of your favourite markets, and yet, obviously, valuations always trade quite expensive in India. But we've got to think about why and what equity valuations actually mean. And the expensive valuations in India are simply reflecting expectations of very good growth and profitability over the coming years. And why not? We believe that those expectations will be met because India is finally in a position to really springboard into the next decade or two as being the most dynamic major economy in the world. And therefore we believe that those expectations will be met or exceeded, and therefore that Indian equities are a very good place to position over the coming months. We also like Indian bonds, by the way, that give you good levels of yield and also a much more stable currency. I think that investors need to understand that the fundamentals of the Indian economy have changed very significantly, the very structures behind the currency story.
For dollar investors, then, there's a narrative that seems to be, if it's India, then I need to take from somewhere else, and maybe that I take from China, for example. Do you see it as zero-sum?
Not at all, no. I think that, again, from a diversification standpoint, perhaps investors that have never looked at India, never looked at China before, I think that they're both very good candidates for a global portfolio, and that's what we mean by the smart diversification, is actually looking more holistically at the opportunity set globally, because these markets are growing strongly, and they're easier to access than they've ever been before.
If India is sort of that growth story for you, and if you need to have that diversification, I wonder, how do you barbell it? Is there a certain market or asset class that you think could be the more defensive play here now?
Well, you could actually pursue an India multi-asset type strategy because, as I mentioned, the bonds also give you domestic bonds give you good levels of yield. But at the same time, there is that convergence play where Indian bonds could have a secular reduction in yield, which will bring both capital gain, but also that carry as well, in an environment where we expect the rupee to be much more stable in the coming years. So I think that is an interesting place to explore, is a multi-asset approach to India.